Welcome to the CLS Market Review for the week of January 13th, 2014. I'm Paula Week. The age of instant gratification. The hot news last week was the non-farm payrolls report, which coming in at only 74,000 new jobs created, compared with 197,000, which was the consensus expectation. I knew the second the non-farm payroll report was announced Friday morning, as I had CNBC on at home as I was packing my daughter's lunch for school. Had I been driving, I would have accessed Bloomberg on my iPhone, at a stoplight, of course. Had I been in a meeting, I probably would have had it readily available on my iPad. Nonetheless, I would know instantly, as with many investors who follow the markets. It's great, isn't it? Having all the information you could ever want at any time, anywhere. Or is it? So many speculators, traders, and even investors attempt to figure out what all this information means. First, everyone is interpreting analyst forecasts going into the announcement, perhaps making their own prediction on what the report will reveal. Individuals then may attempt to predict how market participants will react to this information, which many will actually trade their portfolios as breaking news is released, hoping they will be on the right side of their trades. While I'm not saying that investors shouldn't pay attention to the health status of the economy, I do think there are plenty of people who use this information age era to take too much action. Unnecessary and excessive trading often leads to higher costs and lower returns. I would encourage investors who are glued to the news, think before you trade. When was the last time you reviewed your securities valuation metrics? Have you analyzed the operational costs of holding and or trading your security? Have you analyzed the liquidity impact? Have you reviewed multiple technical indicators to give you a read on investor behavior and strengthening or weakening trends? Have you ever received a research report or seen a news story discussing the positive prospects for an asset, so you send your trade order shortly thereafter? Have you ever been guilty of trading the story? This is when having a more disciplined investment philosophy is so important. News and research can portray conflicting messages, sending confusing signals to investors, not to mention market participants don't always act rationally upon receiving the news story. Having a disciplined approach helps an investor take the emotion out of investing. In our PDF and podcast, we'll further discuss our investment philosophy and what we are seeing that looks attractive. Also look for a quarterly market review this Thursday. Thanks for watching and have a great week.